fire, now it's closing in. nothing to bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been, than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So for the entire weekend after this drop, liquidity grab slash bull trap to the downside, we have been holding this perceived support and resistance line on a daily time frame. The next stop, if we break this, is going to be down at the 29,657 and recovery of the wick range that we've been talking about for quite some time. And it looks like the daily candle closed just below that wick level, or that support structure level. Remember, it's a zone though, so we could come up here and test these liquidity pools, reclaim some of this stuff, and then come down here and make a giant wick beforehand. So let's go into, also on the pitch fan, we had previously seen a rejection of that 0.65 level of the mean reversion path to the upside. Why do these levels respect so well? Well, it uses previous impulse retrace ideas and projects out that trend line, that diagonal trend line into the future. And it's been holding true since January 16th or so for some of these levels, these diagonal pitch fan paths. So we just leave that up on the Coinbase chart until it stops respecting it, which it seems to be doing. So we have 0.65 rejection, heavy drop out of that 618 premium down into the 0.5 perhaps. 0.5 would take you down to 29K even, 29.1, 29.2-ish, depending on the time of when it happens. Let's go into 𝗥𝗲𝗹𝗁𝗲𝗀 and take a look at the liquidity before we go into our momentum indicators. Let me turn this off really quick. And what is high block? Well, it's when people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters lie. And so over the weekend, we didn't see a single pool enticed in until yesterday when it dropped down a little bit and enticed in some pools of 91 million in shorts, which they sharply reversed back and reclaimed on those 100x pools.
Fatality.
This is why you don't play with the leverage too much on the weekend, because as you can see, they are a lone fish in the pond that they immediately came back to after enticing in. With only a few longs enticed in on that drop there, it looks like they hooked, line, and sinkered some shorts, and they never came back to that level where they entered. So they are currently underwater and still underwater at that 30,638 level, which is also stacked nicely with that 50x pool from before at 624,179 million. So it's starting to stack that region. And then just this morning we started to drop down a little bit more and take out some enticed longs of 78 million here to the 38 million in shorts. After taking out some of the shorts, they came back for the longs and took out this 78 million 100x pool here.
Fatality.
And yeah, after taking out that long pool, they enticed some shorts back in, and it looks like they may be heading up to that range. Top of that range for the 50x pool is just around that 30,729 region. I believe we had that outlined for you, but we'll get into that in a moment. You have some more over here. Let's just zoom in to see. You have a pool up at 624 and a 100x pool at 701. 30,701 for that 100x pool at the top of that candle could be reclaimed easily on False Move Monday. So False Move Monday could go up to go down. We haven't seen that down play just yet. We did see the down up kind of play out that we projected, but not up as much as we would like to see. It's mainly sideways consolidation. So let's go expand our vision to the higher time frame pools, shall we? Shout out to everyone here. Had to come hit the button for you. Thank you, man. All right, so if we go into that 7-day time frame, 7-day time frame is imbalanced still to the downside. It looks like we could come down into these 29.2 region for that imbalance to be reclaimed. Do we go up and reclaim just a little bit of something on this range of 100x, 50xers before they go stab at it? You go up to go down, and you go down to go up. So I wouldn't be surprised if we do both before the larger play of reclaiming that downward pool. And on the higher time frame of the 1 month, you also have that double-digit imbalance all the way down to the 29.1 region. Even down 29K even, you got double digits, 10 billion. So you got 13, 16, 18, 17, 16. And 1, 2, 3, 4, 5. You got a little bit over 70 billion if my math is correct. So you got 70 billion in liquidity down here on the monthly time frame, not to mention the juiciness you get on the way down from 29.8 down to 29.5. You still get a good $20 billion as well, as opposed to going all the way back up to 32K you don't really have that much on the monthly time frame, single digits of billions. Mainly you would go up to stop out the high leverage people and then go down. And that's what the stop, hunt, rise, drop, or the dolphin dip, the drop down, stop, hunt, rise idea is about. So you go down, stop out all the 100xers, then go up. And stop all the 100xers on the top end and then go down. All right, so let's expand our vision to the 3-month. 3-month, you see this large imbalance down at 24.6 and below for those double digits nearing $70-80 billion. And on the immediate upwards path, you have some imbalances up in the areas to 33K and beyond, mainly at the 32K region, $60 billion to be taken, getting heated up there. Coming down to that path down below, you have the 33 billion at 29.2 and 32 billion at 29 even to possibly come back to on the 3-month time frame. Now, if we go to the 6-month time frame, you can see that there is a juicy $120 billion up at 33.3. I like the number. So coming up to here would be nice on the 6-month time frame at some stage. You got also 110 billion at 32.1. You got 26 billion at 29.7, 31 billion, 29.4, 45 billion, 29.1. So coming down here to clear this long liquidity range, stop out all the consolidated longs over the last 24 days. How many days is it now? Let's just be clear. So we started over here, boop, 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 boop. 25 days. So for the last 25 days, we've been consolidating. We did stop out at the halfway point, some of the longs, but some hopped in here. So coming back down to recover all of those long consolidated longs over the last 25 days would be the play. If you were going to go up into this 33.3 region, you would expect to come down and clear this 45 billion, 31 billion, and 26 billion on this time frame first, in my humble opinion. Now, if we go to the 2-year time frame, 2-year time frame shows that nice projected path to the upside, where you have that 175 billion now at 32.4, 156.7 billion at 32.8, and 192 billion at 33.2. So that 33.3 looks like it wants to be reclaimed all the way up to that point. That would be over $500 billion in short liquidity just sitting up there on the 2-year time frame. So I'm more bullish than bearish in terms of coming back to this at some point before coming to this imbalance of $241 billion down at 24.4. So do we come up into this range and start putting in new highs, getting everyone bullish, and then come down to here? That would be the play to do. But beforehand, you have that 86 billion down at 29.2 and 42 billion 29.8, but 29.2 more realistically to stop out first before you head in that direction. I've said it before and I'll say it again, you cannot have a sustainable move to the upside without clearing the longs first. Let's go back historically speaking and see where that's true. So for example, here you had a lot of longs consolidating nicely since let's say January to March. So not only from January to February, they stopped out all the longs in this range and then went up. They also did it again where they consolidated and stopped out everyone that still remained in and then went up during the Silicon Valley Bank failure. So yeah, conversely, you have a lot of shorts building here, so they go up to stop out the shorts and then come down. So it's kind of a range that you expect. If we range out that, if you see a nice dip below the range where the liquidity builds, then that's kind of where you would expect to see some sort of divergence play out, where they stop out all the people hoping it goes a certain way and then go the way they hope. It's a game of traps through and through. All right, so let's go into our projection from yesterday, which kind of played slightly out. Did not go up to a level that we liked just yet. but it did go up and kind of reverse back in that direction. We'll reassess by removing this now. Essentially sideways, but rounded top, kind of suggesting fatigue to go to the downside. We'll see how that plays out. This sharp reversal to the downside from Friday into Saturday of 4.68%, a large sharp reversal to that downside path. Let's go to the weekly time frame and just see how the candle held up over the week. That is a shooting star if I ever saw one myself, and that's when the wick is extremely long, like a star falling out of the sky. And then on the weekly time frame, suggesting you could come back into these candles now. That is your well, let's do it all together. Let's start to take our oscillators on. So heads up display goes on, and our oscillators as well. Link in the description for more. If you're wondering what it is we are throwing on, you could toggle the toggle switch to see all of the components in its glory, or read about each single one as we go over it, if you please. So if we go to the weekly time frame, we closed beneath the adaptive moving average, and we could be getting some fatigue or some wickage and fatigue potential of a rejection of that not adaptive 200 weighted moving average. So if we get rejected off the 200 weighted moving average, we could come down to the adaptive moving average as a test of support at 29.376 on this chart. So that makes sense with the recovery of the wick and testing and stopping out of the liquidity as well. And that would be a higher time frame idea to think about swinging if there is divergence spawned on the money flow. If we go into the oscillators and take a look, we are seeing this KD line go up despite us going down and giving us this fatigue potential. The money flow is coming beneath the RSI, expressing that at some point you could see a gravitation back up to the RSI. However, the Williams is getting overbought and having this double top potential. The last time we had that and the alarm went off, we did see weeks of downside ensue. So when you get to that fatigue point on the weekly, beware of that potential of a reversal. Now, we still have room on the stochastic RSI to come up a little bit more on a few weeks of upside. So this does not necessarily mean it will occur immediately. If we look to the 3-day for that insinuation, I was talking about how the 3-day average has to come up a little bit more. Generally speaking, you would see it come up more before you see a reversal. So it would be, another 6 to 9 days plus of this coming up to a point where it would reverse on you like that. So this gap and separation insinuates we still have some time perhaps on the 3-day of meandering around while this comes up some more. One thing to note on the 3-day time frame is we have rejected off of the thin boy baseline here. What is the baseline? Well, you go to the baseline here on momentummaster.info. It's your first sign of reversal. So if you see that reversal point of that fatigue of these baselines closing above the price action, and then you get this one closing candles in a day beneath this one, this will start to curve down and give you this cross down potential. And the last time we had that, when we pointed that out to you on Sunday, April 16th, across the daily as well, then we saw this huge suppression of price on the 3-day. So this was preemptive. We saw this before this big candle occurred. So just something to look out for. If it does start to occur, we'll keep you posted, but we're still 6 to 9 days away from that happening on the 3-day time frame. Let's go to the daily. The daily cross down event has been in effect since Sunday, July 2nd, and we've seen steady suppression and shorts playing out with a fury in response to any long potential coming out here. So until we start closing daily candles above these baselines, the suppression of the daily cross down event is still in effect. So coming down to these regions and testing this cloud for support would be an ideal thing to see. The cloud is getting thicker on the daily time frame, suggesting there's more volume trading in this area. Interestingly enough, despite it tapering in a manner here, showing the momentum is starting to fade, but the trading volume is increasing in thickness. So the interest is being generated in this region. The Williams is starting to come down in a nice manner here. This is what's causing the suppression on the stochastic. The money flow is coming also beneath the RSI, suggesting they're winding up for a pitch to the upside at some point. If we go to the 22 hour previously experienced that bearish divergence which played out, and we're seeing the money flow come down. Williams as well, we're still not in that sweet spot just yet for the 22 hour. We did have that cross down event a day or two ago, so we were pointing out this possible suppression of price that could occur on the 22 hour. If we go to the 12-hour time frame, the 12-hour time frame also did have that cross down event close. The last time we had this cross up close, we did see upside. So are we going to see downside ensue? As a result, it is likely to be the case if we have these candles continuing to close beneath these baselines. If it just goes up to become a sell-off wick and come back down here, then we could be coming to test this super trend at 29.5 and reclaiming this wick idea could be real on the 12-hour time frame. Let's look at the oscillators. You do have an oversold stochastic RSI, but you cannot look at stochastic RSI alone. You need to juxtapose it with other momentum indicators. Hence, this is momentum master. It's the master of momentum, so it brings all of your best momentum tools to the battle and allows you to use them in your arsenal accordingly. So when the stochastic gets suppressed as it did here, why did it get suppressed? Why did it not take off on the 12-hour time frame? If you just trade stochastic RSI, you're not going to see why this gets suppressed like this. However, on the Williams, you see that, oh, there's an alarm here. It's crossing down. It's fatigued. It's overbought. So this is not in conjunction with this. This is oversold. This is overbought. So this is going to get suppressed. And sure enough, it gets suppressed. So unless the Williams gets to that sweet spot where it's oversold and the stochastic is oversold, and then you get some bullish divergence on the money flow, and you get these double bottom green fertile crescent ideas I talked about with the rising sun, then you start seeing some potential for some real upside. So until we get to that sweet pocket on both of them, I'm really not interested, and I've said that. I mean, you could take that risky scalp at the premium range and take these for percent. Good on you for doing that. The hourly play did have you at hello for that, and we can show you how the lower time frames do take you to the promised land sometimes. So if we go to the promised land play, that on this was a perfect play. It was 2 p.m. my time. I was in a lesson at the time, so I missed this play, but you could have been getting these alerts to your phone and see this cross up potential on the hourly. And guess what? You had the Williams and the stochastic in your favor here with that double bottom idea intact. So if you just ignored the higher time frame and played this one with those two momentum indicators in your favor with the money flow beneath the RSI here, that would have taken you to a good region. So as it stands right now on the hourly time frame, are you in that region? No. The Williams could still come down further, suppressing this hourly, and this is why the hourly attempts to take off and fades. So this attempt to take off and fade is generally met with incongruence and ambiguousness or contradictions from another momentum oscillator. So considering to add these tools to your arsenal would do you justice, because it spent hundreds upon hundreds of backtesting hours to find out why things get suppressed and why they need, and finding out other indicators to overlay with them. It's not superfluous, it's not without meaning, and it does play out. So if we go to the 4-hour time frame, we see that the 4-hour is attempting to take off here, and we are reclaiming some baseline potential. The baseline was reclaimed on the thin boy here, and it's attempting to take the fat boy over as well for a 4-hour play to the upside perhaps. We previously had that, once again you do have that subtle suppression idea of the 6 hour and up. So if we go to the 6 hour, we skip the 6 hour. The 6 hour suppression is also in effect. We tried to come above the thin boy and failed off the fat boy baseline, and are now back to the thin boy, attempting to hold it on the 6 hour time frame. So you're getting some ambiguousness between the cross ups and the cross downs. So the 4 hour wants to cross up on you, while the 6 hour is still saying no way, Jose. So you got this incongruence between the time frames, but the subtle suppression of the higher time frames should ultimately win out in the end, although this is the 12 hour and the 6 hour. So you got the daily, the 22, the 12, and the 6 crossed down on you with the baselines, and the 4 hour still crossed down with the potential of possibly crossing up here on the 4 hour, likely to get suppressed. And you have now an hourly cross down, so that you have the lower time frame also suggesting downside. So the false move Monday, we could come down to here entirely for Monday, despite having some pools enticed in. They may be just making the break. The algorithms could have been triggered with the weekly candle close. If we go to the hourly time frame, this Williams coming down to suppress this takeoff could be in store. You do see sometimes bounces off the 50 level for the Williams, but more likely than not, you could get a hard reset of that. We are also seeing this was huge selling volume on the PVSRA strategy, but it did not really move the price so much. We also had two offloading positions here, selling volume on these two candles that enticed some shorts in. As it stands right now on the hourly time frame, we are seeing a sell-off wick, a reclamation of that vector candle, and a sell-off wick to continue further down, and a rejection of this adaptive moving average we held for the weekend. And we're still seeing the bearish super trend holding in effect here. One interesting thing to note, I'm going to remove this retracement tool really quick. So if you'd use the bearish trend-based fib extension level, like if you were looking for entries for a short, you would take this idea here, you impulse to the downside, swing it up to this area here. It would have given you that 236 entry idea in the hourly. That next hour you see the 236 not hold, you could have entered this and seen that we came down to the 706. We tried to come back up to reclaim the 236 with a failure, and came all the way down to the 2 level of a Hail Mary short idea. This is how the trend-based fib levels work to your advantage in terms of measured moves and regions to look at. So this was on that small hourly time frame. Let's go to a higher time frame and try to measure a bearish projection. We would have to see a failure come up here. Like if it did something like this, where it comes down, comes up, and then goes down further, then you would be able to take a trend-based fib and go 1, 2, 3, and then it would give you this 236 entry for potential short regions down in this region here. So that's assuming it would go up to that region at all. As it stands right now, we're breaking that super trend on the 6 hour. We are breaking the 200 weighted moving average on the 4 hour. This suppression of the fat boy could just have us wick down from here. Eventually, when they do play out, they don't always come back immediately when the move goes underway. It's just the pools that enter are the ones that are the lucky campers that win, which is why you should, if you are on the right side of the trade and it starts to play out, set profits, reward yourself as you go. Don't assume anything about where it's going to end up. Eventually take profits and set stops into profits so you win either way. If you go here, 4 hour time frame, getting money flow above the 50 level. Let's say what's up to everyone here. Yo, what's up? Anyone got anything they'd like me to look at? Personally, I'd love to see it just take a huge dump. Like, if I'm just being honest, like, I would love for it to just come down to here and take this out finally. That's what we've been really waiting for this entire time. Just come down and reclaim all that liquidity. Get it over with. This was a pretty strong drop to the downside, and they trapped some longs up here, so the continuation log, bull flag, Mario flag people got trapped right about here. So coming to knock them out entirely would be the continuation idea I want to see. Maybe they come up to here to try to get them to dollar cost average and then drop down, which is why we put these levels out to you. I mean, it's pretty sparse by comparison. Now, if I look at this short pool and how thick of the pools that were enticed last week as opposed to this week, there are less, but the amounts are still real amounts of money, so coming back into this region could be the case. I'm more interested in the downside projection than the upside, so that's why I've been putting that out for you. The cloud has thinned on the hourly, and we are seeing a rejection of that hourly time frame here of that cloud. Four-hour time frame, attempting to hold this baseline for whatever reason. Could be that inducement trap to get these shorts to come in more detail. Let's go take a look at the USDT dominance and the Bitcoin dominance. So the dominance is attempting to come up here. We got a cross up of the dominance here. So Bitcoin's trying to take a little bit back of the party as people probably leave the alts after licking their wounds from that trap that was laid for them, and they move into USDT or buy back into Bitcoin on the lows. And the USDT dominance also came back with the fury as they put their money into the market, thinking that the XRP case means bull flags for everyone, and then that was sharply told the other side of the story, and they get kicked back into the USDT. Okay, if we look at the USDT dominance, does it want to continue? We were previously seeing this cloud idea, which did end up with the XRP case dropping down here and people inserting their money into the market. We saw that coming out to you live. That was pretty cool. We're getting the idea of a cross up event on the 12-hour for the USDT dominance. If this crosses up and closes, that means people will get kicked into USDT. Does that mean people will onboard money onto USDT onto exchanges? It's unlikely with how difficult it is to do now. So this means existing trades in USDT will revert to USDT, as in if you have like Matic USDT, you will get kicked out into USDT, causing this to rise. So when the USDT dominance rises, it insinuates that people are going to lose the trades they're in, which is generally HODL spot trades for longs. So that would mean things go down when this goes up. Okay, so when this goes down, this means the XRP case was won. People put their money into USDT trades and saw some upside on that, which was sharply reversed with the fake out. So they got kicked back in and they lost some of their money. So it's at a less level than it was before. So that amount was taken by the exchange. Like, thank you. And if we go to the BTC dominance, that's why the dominance dropped, because we saw that the total 3 was rising in better than total 1 was. So we saw that live, we didn't know the case was over, but we said there's an alt rally. Some people are having alts interest more than Bitcoin interest. So this dropping insinuates people were going into alts, especially with the drop of the USDT dominance in conjunction. So they were taking their profits off of BTC, putting it into alts, and now we're seeing this start to come back, potentially speaking. So the 4-hour time frame is overbought. 12-hour is in a sweet spot for the dominance rising. Now, if the dominance wants to rise and the USTD dominance wants to rise, that means that Bitcoin's going to steal the show in all fronts. And if it wants to steal the show and put people into USDT, that means it's going to drop. If Bitcoin drops, it steals the party. It kicks people out of their pairs, their BTC pairs, into BTC as it drops, and because alts fall faster than BTC, and then so the dominance rises and the USDT dominance rises. Hope that makes sense. As far as I'm concerned, that's what the juxtaposition of the dominances means. There's a similar thing with the VIX and the volatility of the stock market that you could be looking at as well if you're into stocks. And the VIX has a rocket ship insinuating a pullback, because the VIX deals with the volatility of it going down. So when it goes up, things go down, kind of thing. So if we go to the NASDAQ, let's go take a look at what things are doing on the NAS. The Asian range is open now. ES1. So we came up above the range. We cleared this idea, so we can remove it now. This was a gap from way back when, in 2022. This was a gap as well we cleared. So all of these ideas were cleared on the ES. Took out the previous high, took out that range high, continued even higher. And now we're starting to see the top of the range of the fair value gap from 2022, and then we're starting to come around. We have the 4-hour cross down event in play, so this could bring us back down eventually into this region for this gap down here at 43.28 to 43.03 at some stage. You know, it's not guaranteed immediately. You could bounce off some levels here. This fib was reclaimed, so it's done for me. So we're going to move this up to here and move this over to here. So first things first, do you come down to and have a reaction off this 618? The 4-hour time frame is oversold, but if you go to higher time frames on the ES, what do you see? Overbought, 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 and potential cross down of the leading MACD, and potential cross down of the baselines with the price beneath the baseline. So a 6-hour play could be inbound here. We go to the 12-hour, also kind of tweezery, toppy rejection of the baseline, and overbought, overbought, but the money flow beneath the RSI could insinuate a push at some lower time frame at some point. Let's go take a look. So coming back to reclaim some vector candles, there's a 500 level whole number. At some point. And this also, the nukes are opposite of this rocket ship. So seeing the rocket ship of the VIX take off as things go down. So if we're seeing a take profit week, then it's possible this could come affect the market to this coming down as well. If we go to, I think the BTC futures is here, the CME futures. All right, so yeah, false move Monday, everyone. So beware of that. Ultimately, as of this moment in time, I'm not looking for a long, I'm looking for the continuation down to the 29.5 region, reclamation of the wick idea coming at you. Do we come up and clear these 50x pools first before we do that at 30,729 region? Do we go up to go down is the question. They are pinging a little bit more short interest right now over the last 12 hours or so. They did ping in more longs at this point at the top as they stopped out some of these guys here. So do they come back and stop out this 100x pool? And as they make their way into this, do they start to meander their way down as opposed to drop hard down? It is Monday, so we'll see. Once again, my overall idea is reclamation of that wick. So if keeping it simple, if you have trash consolidation like this, they can call it like a bear pennant, whatever you want to call it. It's just another B wave that leads you down further, a continuation pattern. So coming down and continuing into this idea is what we are looking for currently. At any step of the way, you could be getting some divergence, but I would highly likely, based off of the liquidity on the 7-day and the monthly and all those other time frames we went over earlier, that is not speculative, it's real, as you see here. So coming down into these regions to gather up this liquidity to the 29.2, to the tune of 29.2 would be ideal. And so that's my story, and I'm sticking to it, and I will bid you adieu at that point if you have no questions. All right, well, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. And we'll bring the fire, the precision, the accuracy, all that fun stuff, and we will catch you on the flip side. Peace.